see in the bottom table, compared to July, September, October was higher, and so was power consumption. And the uptick in e-way bill generation from 10.9 to 11.7 from August to October is also encouraging. Services sector continue to be resilient. Services sector PMI is being consistently in the expansionary zone, and UPI transactions, both volume and value, have seen a sharp uptick in October, and there is double-digit growth in air cargo activity while port traffic remains steady. Moving on, I think we all know that the passenger vehicle sales in October helped the industry clear a lot of inventory, two-wheeler and four-wheeler sales, and domestic air passenger traffic handle has not only seen a level shift up in the volumes compared to the previous 2 financial years, but you can see the slight upswing on the right side of the right side chart in the green line in September and October as well. Rural demand has been a bright spot, as we have been writing in the monthly economic review, which we publish around the third week of every month. On the left side, you can see about 7 consecutive quarters of growth in rural demand based on the Nielsen IQ data, and two-wheeler and three-wheeler sales as well in rural India, while tractor sales is at an all-time high because of the expectations of a good Rabi crop on the back of a Kharif crop as well. Inflation in general, apart from very specific items in the food sector, in the food category, and also precious metals, in general, it has been on the lower side. And the Indian Institute of Management, Ahmedabad's inflation expectations, business sector inflation expectations survey has been pointing to declining inflation expectations rather than rising inflation expectations, confirming the fact that there are no second round effects coming from higher food prices, which in any case is concentrated in a few commodities. When it comes to the external sector, while the second quarter GDP data show that export growth indeed slowed down, I mean, we have seen that the export growth rate is 2.8% year on year compared to 8.7% in the first quarter. The fact remains that outside of petroleum, gems and jewelry, merchandise exports are in high single digits, and together with services, this core merchandise exports, excluding petroleum products, gems and jewelry, and together with services, we have seen 10.8% growth in the first 7 months of the current financial year compared to the 7 months of the last financial year. So I think in general, towards when the full year's data is out, we will see that net exports would have made a good contribution to overall economic growth than in the previous financial year. Yes, we are aware of the fact that in the month of October, there was profit taking or profit booking in the Indian stock market by foreign investors, also partly because of renewed excitement about China, shifting of some capital out there. But by and large, if you see on the left top chart, both gross FDI flows and net FDI flows are doing far better than they were doing last year so far in the first half of the financial year. And Indian domestic investors, both institutional and retail, continue to have faith in the Indian capital markets, providing it a certain measure of support and undergirding, so to speak. Well, there is concern about capital formation based on second quarter data. However, that is what prompts us to dig a little deeper and go into what's happening on the underlying drivers of capital goods. If you look at the capital goods imports and their share in total imports, they've been steadily rising. And also, if you look at the increase in capital and infrastructure goods production in the IIP, Index of Industrial Production, there has been a slight and steady uptick over the last several financial years in the first half, if you compare first half to first half of each financial year. And then if you look at the order books of capital goods producing companies, they are up 23% last year, which augurs well for private capital formation. That said, we acknowledge the fact that while we are talking about capital formation being critical, we should also remember that the global context keeps evolving and uncertainties are cropping up every year, whether it is the strength of the dollar, whether it is the potential for trade action elsewhere, and cheaper imports. There will be headwinds compared to the first decade when India's capital formation was growing at very rapid rate. So we need to also to be realistic about the expectations for growth in general. While the trend is promising and the signs are good, we need to be aware that the global context is not the same as it was in the first decade when there was synchronized global growth, resulting also in capital formation growth. But as I said, private investment is gaining traction. This is basically new investments announced by the private sector has increased in Q2 in July to September quarter of this year compared to the July to September quarter of last year. Therefore, together, we are still keeping on track with the announcements compared to the last financial year in the first half. The banking system liquidity is now more comfortable than it was, and that should result in better credit growth, although credit growth in the first half of the financial year has moderated to a level of around annualized growth rate of around 10%, which is in line with the nominal GDP growth. And I think from the point of view of the economic growth objectives, I think credit growth, if it picks up in the coming months, it will also support economic activity in the coming months of the financial year and beyond. In the labor market, based on the quarterly data available for the urban labor market, we do see that labor force participation is picking up and unemployment rate is holding steady. The net payroll additions in EPF subscribers, particularly in the lower age category, young cohorts, net new joiners among the young cohorts in EPFO also has been rising steadily, in the sense that there is job creation or formalization or a combination of the two in the formal sector as well. I now turn from the GDP data also to talk about some of the underlying reasons for manufacturing in certain sectors, because if you look at the manufacturing sector and try to break it down, out of the 23 sectors in the index of industrial production, 12 of them registered very high single-digit growth on average, about 9%, and 11 of them were almost close to registering zero growth in the first half of the current financial year compared to the last year. And these are more of consumption items rather than intermediate goods in further production. Why is it the case? And some of it has to do with the fact that I think both hiring and compensation practices in the formal sector have undergone a change post-COVID, despite the fact that profitability in absolute terms, profitability in terms of growth rates, and profitability as share of GDP have been at a 15-year high. If you can see that the share of regular wage employment is, after a big drop in the COVID year to 21.1%, has picked up, but picked up very, very slowly to 21.7%. The good news is that the casual labor share has gone down. Overall, and self-employed rates have gone up. The other good news is that I hope this results in pickup in hiring by the corporate sector for regular wage and salary jobs, is the fact that Indians are taking to skilling in very, very significant way. If you look at both female, male, and the overall adoption of skilling, both in rural India and urban India, especially between male and female workers, there has been an unambiguous enthusiastic adoption of skilling, and therefore we hope to see this reflected in the rising share of regular wage salary workers. And we should also see this hopefully in real wage growth, what we are seeing in this slide is that the real and nominal wages in rural India for males, females, and in total between males and females put together, what you see is significant growth in nominal wages, but not so in real wages. Of course, we must understand that in rural India, the food component is higher, the rural CPI, and therefore, and the fact that the food inflation rate in the last few years has been slightly higher, although it is dominated by only by a narrow set of commodities, that is one of the reasons why the real wage growth in rural India is somewhat lower or even negative because of the higher weight of food items in rural CPI, despite its domination in a few commodities. But in urban India, it is interesting to note that real wages of males has actually increased over the last 5 years compared to pre-COVID, from 13,426 rupees to 13,834 rupees. Nominal terms, you can see that going from nearly 18,000 to 25,500. Female real wages a slight decline, but overall real wages have gone up from 12,847 to little above 13,000 compared to 2017-18. And also you can see the slight pickup compared to the last 2 years as well on the real wage growth. So real wage growth for urban male workers has done very well. And therefore that is reflected in the overall real wage, positive real wage growth. But nothing of this compares to the kind of profitability growth that we have seen. So if you notice that the profit to GDP ratio was 4.8% in FY24, the peak was 5.2% in FY 2008, but that was a different era when global growth was high and exports were booming, and overall economic growth rates, both in nominal terms, were in high double digits, or mid double digits and high single digits. Considering that post-COVID recovery in profit from 2.1% of GDP to 4.8% of GDP is an impressive growth in the last just 3 years post-COVID. But in comparison, both hiring and compensation growth rates have been somewhat on the lower side or tepid. And that is also somewhat endogenous in creating less purchasing power in the hands of people, less demand for FMCG goods and light consumer durable goods. And that is why you see the impact on that in manufacturing. So to some extent, the private sector's manufacturing slowdown in select areas is somewhat self-generated. In the outlook for the near term, of course, I think while the actual print of 5.4% in real terms is on the lower side of the expectations, the economy is resilient, as you saw in the case of construction, agriculture, and manufacturing. As I mentioned, 12 of the 23 sectors registering high single-digit growth, etc., and exports performing outside of petroleum products, gems and jewelry performing much better this financial year compared to the last. There is plenty of positive signs to take away in terms of the economy showing resilience, underpinned by steady demand and strong, partially, I would say, strong manufacturing and service sector activity. Record production estimates for kharif food grains and promising rabi crop prospects. Labor market is recovering, but as I explained to you in the last few minutes, we can do far better than what we have been doing, and the onus rests with the private sector as well because of the endogeneity of labor income growth and demand for manufactured goods. So better growth in labor incomes holds the key to sustained demand growth and capital formation in the private sector. Global crude oil prices are remaining low, and we think one of the possible benefits of the new administration taking office in the United States in 2025 will also be continued low energy prices, which is a very important ingredient because the counterfactual will be quite significantly growth negative. So energy prices will remain low and affordable and internationally, and that's a very important growth positive for India. What are the risk factors? geopolitical conditions do remain fragile and will continue to impact domestic inflation if supply chain disruptions occur. And same will be the case with capital flows. They will also be impacted by potential tariff actions, which will impact both trade and capital flows. It may also lead to strengthening of the United States dollar, leading to shortage of dollar in global markets, causing exchange rates in emerging economies to depreciate, which would also tighten liquidity conditions in emerging economies, etc. And even if we have very ample foreign exchange reserves, as we do, and we will do far better than many other emerging economies, given the fact that we have a good interest rate support and foreign exchange reserves, we will not be exempt from the spillover effects when these conditions happen. So we should be quite realistic about the kind of world scenario, global scenario that we will be facing in 2025. And because of that, exports also face greater uncertainties. But we should also work on improving the state capacity to spend on capex across the country, and also the capital versus labor mix in the growth plans of the private corporate sector. As I discussed earlier, in terms of hiring and compensation, will also be an important determinant of how we can ramp up the growth rates and the overall regulatory environment. I mean, as we are seeing, even developed countries are beginning to focus on deregulation as a very important formula or ingredient for reinvigorating growth. And I think if we have to realize our employment, manufacturing aspirations, I think, and also therefore aid capital formation and investment, we have to double down on deregulation, particularly among state and local governments, and that will cause both the trend and the actual growth rates to pick up from 6.5% towards 7% and so on. So while the number may have been somewhat disappointing for second quarter real GDP growth, I think we should also use it as a good opportunity to put in place not only hiring and compensation policies and practices in the private sector, but also use the opportunity to double down on deregulation and think of enhancing state capacity for undertaking public investment rather than revenue expenditure. If we do that, then I think sooner rather than later, the second quarter growth numbers will become distant and fading memory. That's all from my side. Thank you very much. We are open to your questions. As I said, I have with me the DDG from Ministry of Statistics and virtually the Additional Director General present here. Thank you very much.
Thank you so much, sir, for throwing light on the sector-wise trends and also for the outlook for the near term. Now I would like to invite questions from the media. So, sir, I have all of them in this thing, so I'm going to take the questions one by one. First of all, we have a question from Mr. Surya Murthy of the Telegraph. I think he has some technical problems, so I'll ask his question. So, Mr. Surya Murthy wants to know: do you think it is time now for RBI to cut rates?
No, I think we have always maintained that we will not comment on monetary policy in public. I mean, all of us see the data. Central Bank is also seeing the data. They know what to do, and I will not be commenting on this question. Next question, please.
Yes, Mr. Lakshman Roy from CNBC.
Hi, sir. Lakshman this side. My question is, since you have projected economic growth in economic survey from 6.5% to 7%, now giving the number of Q2, do you think 7% is feasible, even 6.5%? And second question, since capex growth is also slowed down in Q2, so government should push more in capex?
Yeah, no, in response to your first question, I think we will go back and take a look at the possibilities of what the final outcome will be. in terms of the eventual growth numbers for the full year. But let's also remember that these are first estimates in some sense, and our data are not seasonally adjusted, and the full year growth rates for FY25, you will get the first cut estimate in January, and then February, and then May. So I think it is too soon to say that even the 6.5% number is in danger. So I don't think we should extrapolate too much. Now, as far as the capex is concerned, as I said, the capex slowdown was across all levels of the government, union, state, and central public sector enterprises. So there is definitely a need to examine the impediments that stand in the way of capital formation. As I said, some of it could have been due to excessive rainfall in the second quarter, uncertainties related to the election season, and therefore capex has room to ramp up in the remaining 3 months of the year. Right now, as we speak, November data, we don't have it yet. So I think, again, the numbers are there for all to see, and therefore capex growth will pick up in the coming months is our best hope. Next question, please.
Sir, before we take the next question, I would just like to make an observation that request Mr. Sanjay Kumar and Dilip Sinha that to also take note of the questions in case they have additional remarks at the end of the question and answer session.
Yeah, in fact, I told Mr. Dilip Kumar Sinha after my presentation was over, before we went on to the Q&A, whether he wanted to say anything. Please go ahead. I don't know if the camera, you may probably come a little bit closer, pull your chair and be the cam. Yeah.
Good evening, everybody. Am I audible?
Yes, you are audible.
Yes, sir. Yes, sir.
Yeah. Chief Economic Advisor has already covered the entire gamut of this story very, very nicely. Just I would like to add one thing. As he mentioned that the manufacturing sector could not perform well. And so even the thing is that though the output of manufacturing sector was modest, but the cost of production, that is in intermediate consumption, it registered higher growth rate. And GVA is output minus IC. So accordingly, the GVA growth rate was even lower than the output growth rate. So that's the point I wanted to add here.
The ADG, Mr. Sanjay, did you want to come in or?
It's okay. So it's, everything has been covered. Okay. So I have nothing to add.
Okay. Thank you.
So, sir, we can also.
Dr. Bashir, you can continue with the Q&A. Yeah.
Yes, sir. So now we move on to Karishma from Business Today.
Good evening, sir.
Good evening.
So my question is, do you think that US elections and Donald Trump's decision of likely imposing higher tariffs on India could challenge our ambitious growth path?
I think it's very difficult to give you precise answers. We are aware of the potential scenarios. I don't think we should jump the gun on this matter because there are some areas on which we will actually benefit, as I mentioned, in terms of crude oil and energy prices in general, and also with respect to climate and environment policies, in which we're already doing a lot on our own steam with our own domestic financial and technological resources. I think we will have higher degrees of freedom. Given the fact that our manufacturing exports to the United States are relatively of a smaller share, I think we should not be overly concerned or exaggerate or amplify the threat factors at this stage, because the positives can also offset some of the potential negatives, and to the extent that some of the global policy discourse or the US administration's policy discourse on import duties prompts us to take a review, because our Honorable Finance Minister in her budget speech in July in paragraph number 117 did point out that there will be a comprehensive review of the duty structure at the raw material, intermediate goods stages, etc., to ensure our competitiveness, etc. So some of it may also be a blessing in disguise in terms of accelerating the review process that we ourselves have initiated. So I think we should not jump the gun on this matter. Next question, please. Dr. Bashir, I think you're on mute, or
Mr. Shishir Sinha from Hindu Business Line.
Sir, good evening, sir. Sir, I have two questions, sir. Sir, I have two questions. One, there is a lot of talk about that we are entering into a stagflation zone because of the high inflation which was recorded in the month of October, 6.2%, and now the growth rate is low. And the second question is that do you think that the Q2 number is just a blip and just a one-off, and we will not see the same kind of situation in the coming quarters, sir?
Which one? What's the second question again, please?
The Q2 number of 5.4% is just one-off number, and it's not going to be a kind of a repetition kind of thing.
Your first question is I can dismiss it relatively easily because stagflation is a wrong phrase to use. There is no growth stagnation. We are growing. We are still growing. The growth rate is 5.4% year on year in Q2, and these are not seasonally adjusted data. These are first estimates, and as I said, our GDP estimates go through 4 to 5 revisions. And stagnation is not growing at all. So it is conceptually wrong to call it stagflation. And when it comes to the inflation part of the word stagflation, 6.2%, and we have said enough times, returned enough times in the monthly economic review, is dominated by just about a handful of commodities. Food items of tomato, onion, potatoes, gold, and silver. And we also showed you the inflation expectations of the businesses in the slide deck that I presented a few minutes ago. So therefore, to use the phrase stagflation with respect to India is erroneous, conceptually and practically. Data do not bear that out. I think we should avoid using such wrong phrases to describe the situation, because the public will be misled by economists and journalists using such phrase when it just does not apply to our country at all. Second question, that's exactly what I said. There are enough reasons to believe that this 5.4% is one-off rather than the beginning of a trend. I gave you information on how consumption in rural India is holding up. October sales of select items of manufactured goods in urban India did better, and how the order books of capital goods companies grew more than 20% in FY24, and agriculture and construction sectors doing far better than they were last year. Of course, construction was doing well all the time, agriculture in particular, and therefore there is every reason to believe that we don't expect to see this 5.4% being the beginning of a trend or a pattern. Thank you. Next question, please.
Surbhi Prasad, Business Today.
Ma'am, sir has already answered my question. Thank you.
Okay.
Thank you.
Sapna Das from CNBC.
Hi. I hope I'm audible.
Yeah, you're audible.
My query too has been more or less answered. Just one small thing on this, sir. Overall our fisc has been doing very well, but the Q2 numbers slowing down, on expected lines probably. So how do you see the have been doing well, especially direct taxes? Just your view on that.
Sapna, there is a problem. I don't know if you're Sapna, there is a problem with your audio quality. Your voice is going in and out. We couldn't understand the question at all.
Probably if you switch off your video, if you switch off your camera, then your voice will be better. Now, Sapna, you can't. Now you ask the question.
Yeah, okay. Thanks very much. I think more or less my question has been answered, what my colleagues have been asking earlier. But just wanted to get a quick
member of jury of NDTV was a totally different challenge altogether.
When you recognize contribution to society, these stories are inspiration for everyone who views them.
The NDTV Indian of the Year is an extremely important initiative.
Nominees were just extraordinary.
Each one of them is a rock star.
And the achievers in this field who are inspiration for the Indians in this country have been chosen for this prestigious award.
When the whole day passes like a blur, the news just whizzes past, and you're trying to stay informed. It is our job to bring you news that truly matters. At Profit 360, we cut through the clutter, the Wall Street deals, finance and policy news that could shape your tomorrow, the newsmakers, the trendsetters, and the innovators. In 30 minutes, we've got you covered. So stay ahead, stay informed, and stay profitable with Profit 360.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
When the whole day passes like a blur, the news just whizzes past, and you're trying to stay informed. It is our job to bring you news that truly matters. At Profit 360, we cut through the clutter, the Wall Street deals, finance and policy news that could shape your tomorrow, the newsmakers, the trendsetters, and the innovators. In 30 minutes, we've got you covered. So stay ahead, stay informed, and stay profitable with Profit 360.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
When the whole day passes like a blur, the news just whizzes past, and you're trying to stay informed. It is our job to bring you news that truly matters. At Profit 360, we cut through the clutter, the Wall Street deals, finance and policy news that could shape your tomorrow, the newsmakers, the trendsetters, and the innovators. In 30 minutes, we've got you covered. So stay ahead, stay informed, and stay profitable with Profit 360.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
When the whole day passes like a blur, the news just whizzes past, and you're trying to stay informed. It is our job to bring you news that truly matters. At Profit 360, we cut through the clutter, the Wall Street deals, finance and policy news that could shape your tomorrow, the newsmakers, the trendsetters, and the innovators. In 30 minutes, we've got you covered. So stay ahead, stay informed, and stay profitable with Profit 360.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
When the whole day passes like a blur, the news just whizzes past, and you're trying to stay informed. It is our job to bring you news that truly matters. At Profit 360, we cut through the clutter, the long street deals, finance and policy news that could shape your tomorrow. The newsmakers, the trendsetters, and the innovators. In 30 minutes, we've got you covered. So stay ahead, stay informed, and stay profitable with Profit 360.
Headlines you start your day with.
Hello and welcome to NDTV Profit. It's a Friday evening bouncer that's come from the government, the latest quarterly GDP growth data that's coming in for the second quarter, July-September quarter. GDP growth is at about 5.4%. That's what the government is saying. That is much lower than the 6.5% estimate that was already there from economists. Not only that, this is the lowest GDP growth number in 7 quarters, and that's why this data is very, very important to sort of cut and slice and try and understand what's actually happening behind the picture. And that's why we're calling this the Q2 GDP shocker. Now, in the graphics that are going to come up on the wall behind us, we're going to talk about what exactly happened here. July-September GDP growth has slowed to 5.4%. This is the slowest in 7 quarters, as we already mentioned. We have also seen that 6.5% was the estimate by economists. That has not been met. In fact, it's far away from that. It's also far away from what the RBI estimated for the second quarter, which was 7% GDP growth for this financial year, second quarter of this financial year. It's much lower than that. Now, what exactly happened behind the scenes? There are 4 key reasons why exactly this growth number have not been met. And I'll throw to my colleague Pallavi to try and explain to us what these 4 reasons are. Pallavi.
Right. So like you've mentioned, the number is substantially lower, not just from the Bloomberg poll of economist estimates, but it's also even lower than what the RBI was targeting, which throws up the big question regarding whether we're able to now meet the full year forecast, which was at 7.2%. That was already a fairly lofty target or a fairly lofty estimate, according to economists, and given the Q2 shocker of sorts, that sort of puts that number into even greater jeopardy, because it's very unlikely that we're now going to be able to meet that figure for the full year. A lot of economists have already begun revising their full year forecasts, and they're closer to anywhere between about 6.5% to 7% now for the full year. Like you've mentioned, multiple reasons for this weaker than anticipated figure. The key disappointment was definitely from industrial GVA. So construction, utilities, and manufacturing, of course, which came in at 2.2%, substantially lower than what we saw in the same quarter an year ago, and also significantly lower than what it was in Q1. Of course, partly because of the seasonality, Q2 did see an extended southwest monsoon. But even factoring in that, the figure is lower, and it remains to be seen whether we're able to make up in manufacturing GVA going forward. Construction, again, critical also, Vishwanath, because construction has been one of the key drivers of employment in the last several years, especially post-pandemic in the economy. And a lower than anticipated construction figure also throws up questions regarding employment prospects for a very large number of people who were finding work of some sorts in that space. So it is important for that sector to continue to grow at a strong pace. The last quarter, of course, we saw double-digit growth in construction. Agriculture was, of course, better than expected from Q1, and services was broadly holding up. But of course, on industrial GVA, it's more of a wait-and-watch mode for now. In terms of expenditure side trends also, while we have seen mixed indicators from urban as well as rural demand, with rural demand showing some sorts of recovery. Urban consumption was, of course, iffy in Q2. That has shown up in the numbers as well. Whether that's recovering or not is something we're still watching out for.
Right. Pallavi, you mentioned urban consumption, that there is an expectation that with better than expected sort of crop in the second half of the financial year, you will see that improving. Rural demand, as Pallavi said, is holding strong. There's also this festive season as well as wedding season sort of push to demand that is coming in towards the end of the financial year, which is hopefully going to push up the growth number. But as Pallavi said, the 7.2% number that the RBI has seems a little suspect right now. The CEA mentioned that this might be too soon to sort of expect that. But let's see what happens in the next 2 quarters. But that's the Q2 GDP shocker for you. Thank you so much for watching NDTV Profit. Stay tuned.
Becoming a member of jury of NDTV was a totally different challenge altogether.
When you recognize contribution to society, these stories are inspiration for everyone who views them.
The NDTV Indian of the Year is an extremely important initiative.
Nominees were just extraordinary.
Each one of them is a rock star.
And the achievers in this field who are inspiration for the Indians in this country have been chosen for this prestigious award.
When the whole day passes like a blur, the news just whizzes past, and you're trying to stay informed. It is our job to bring you news that truly matters. At Profit 360, we cut through the clutter, the Lord Street deals, finance and policy news that could shape your tomorrow. The newsmakers, the trendsetters, and the innovators. In 30 minutes, we've got you covered. So stay ahead, stay informed, and stay profitable with Profit 360.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
When the whole day passes like a blur, the news just whizzes past, and you're trying to stay informed. It is our job to bring you news that truly matters. At Profit 360, we cut through the clutter, the Lord Street deals, finance and policy news that could shape your tomorrow. The newsmakers, the trendsetters, and the innovators. In 30 minutes, we've got you covered. So stay ahead, stay informed, and stay profitable with Profit 360.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
When the whole day passes like a blur, the news just whizzes past, and you're trying to stay informed. It is our job to bring you news that truly matters. At Profit 360, we cut through the clutter, the Lord Street deals, finance and policy news that could shape your tomorrow. the newsmakers, the trendsetters, and the innovators. In 30 minutes, we've got you covered. So stay ahead, stay informed, and stay profitable with Profit 360.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
When the whole day passes like a blur, the news just whizzes past, and you're trying to stay informed. It is our job to bring you news that truly matters. At Profit 360, we cut through the clutter, the Wall Street deals, finance and policy news that could shape your tomorrow. The newsmakers, the trendsetters, and the innovators. In 30 minutes, we've got you covered. So stay ahead, stay informed, and stay profitable with Profit 360.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
When the whole day passes like a blur, the news just whizzes past, and you're trying to stay informed. It is our job to bring you news that truly matters. At Profit 360, we cut through the clutter, the Wall Street deals, finance and policy news that could shape your tomorrow. The newsmakers, the trendsetters, and the innovators. In 30 minutes, we've got you covered. So stay ahead, stay informed, and stay profitable with Profit 360.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
When the whole day passes like a blur, the news just whizzes past, and you're trying to stay informed. It is our job to bring you news that truly matters. At Profit 360, we cut through the clutter, the Wall Street deals, finance and policy news that could shape your tomorrow. The newsmakers, the trendsetters, and the innovators. In 30 minutes, we've got you covered. So stay ahead, stay informed, and stay profitable with Profit 360.
Headlines you start your day with.
India's GDP grew at the slowest pace in 7 quarters, led by slower growth across the industrial sector. IT grew by 5.4% in the September quarter compared to 6.7% in the previous quarter. Nifty and the Sensex rally nearly 3% during 2 consecutive weeks of gains. Most sectoral indices rise, with Nifty Pharma gaining the most. CRISIL Ratings reaffirms positive outlook on the Adani Group, cites the strength of the group's financial and business risk profiles. Adani Energy sees largest single-day jump in nearly a year, rising over 19%. UBS Securities warns that loan defaults by microfinance borrowers have risen in October, also expects slippage levels to remain high in FY25. Reports suggest that bank insurance deals are under scrutiny of the insurance regulator. Finance Minister and the IRDAI urge bankers to avoid mis-selling. Serious Fraud Investigation Office seals Hero Electric's premises in Gurugram over FAME 2 violations and unpaid dues to dealers. This is an NDTV Profit exclusive. The Mahayuti's meetings in Mumbai are called off as the deadlock over the Chief Minister's chair continues. Eknath Shinde heads to his village as the Sena says that he's not upset. Russia unleashes a wave of missile and drone attacks across Ukraine, target critical power plants and plunge millions into darkness as temperatures hover around freezing. Good evening and welcome. You are watching Profit 360 and I'm your host Nupur Talwar Suri. Well, we begin with the escalating tensions between Russia and Ukraine. Now, Russia has launched a massive attack on Ukraine's energy system overnight by using 90 missiles and 100 drones. Now, more than 1 million people were left without power just as winter sets in amid temperatures that are dropping. Now, this is Russia's 11th major attack on Ukraine's energy infrastructure. Ukraine claims that North Korea helped Russia with these attacks. In fact, the Russian Defense Minister Andrei Belosko arrived in North Korea today for talks with North Korean leaders. Now, the two countries aim to strengthen their ties over the Ukraine conflict. Ukraine's President Volodymyr Zelensky has criticized the attack, calling it a very mean escalation, especially since cluster bombs, he says, were used against civilians. Let's go across to Tatiana Kukureva. She's a journalist who's joining us from Russia. Hi, Tatiana. Thank you very much for speaking to us on NDTV Profit. To begin with, Tatiana, in the past few days, we have seen a sort of dangerous escalation from both Russia and Ukraine. Ukraine, of course, supported by the West, largely the US and the UK. Now, how do you see this influencing perhaps the outcome of this war, given that we do have Donald Trump, the incoming US president, who has said that he will end the war in 24 hours?
Good evening. Well, look, the problem with Donald Trump saying anything is the fact that he hasn't, he's yet to wait until his inauguration, which is, not even this year. So it's the 20th of January. He will not be able to do anything before that. And the ongoing escalation, let me just come back to your statement. You're saying this is an escalation from both sides. Unfortunately, the side that initiated this escalation is the US, which to this day, still refuses to kind of formally, completely acknowledge the scale at which it's involved in this escalation and in the conflict itself. But I do believe that we're moving towards, since Ukraine has been given the green light to use those longer range missiles, and it has been very eager to use them. I do believe that right now, we're moving towards Russia responding, obviously, in a proportionate way, which is, it is going to be this way. There's no other way around it.
Right now, Tatiana, we've had the Russian president also come in and say that Russia may now use its new Orshink hypersonic missiles to actually attack decision-making centers. Now, after the attack that we saw on the energy sites, how far do you see this going?
Well, look, let's, first and foremost, let's understand that that has been the strategy so far. This is not the first attack on energy sites, nor will it be the last. This was and has been the tactic and the strategy that Moscow has been pursuing, hitting military target and hitting energy targets. So it would be all of the enterprises that are facilitating warfare and energy centers as well. There's nothing specifically new to this attack. It's just the fact that Ukraine each time cries wolf, basically, as if it's the first time it's happened. This has been happening repeatedly. It's, it goes down to strategy. And second of all, I personally have a very big problem with hearing from the Ukrainian side, that Russia used cluster bombs in any attack, because we've been publishing the aftermath of Ukrainian attacks using cluster munitions on civilian population for months now. There have been multiple occasions where they've used them, but it's not on, military sites, it's not on energy targets, it's on civilian population in the Donetsk and Lugansk regions. And for some reason, these reports fly under the radar completely, and nobody even gives it a moment's notice. But when Ukraine says, look, there's been an escalation, there hasn't been that much of an escalation this time around. We're doing exactly what we've been doing for months.
Right now, Tatiana, you were seeming to suggest that you believe that there must be US boots on the ground as far as their support to Ukraine is concerned. Now, on the other side, we have heard from the US and Ukraine talk about the fact that there are North Korean troops who are actively being used by Russia. In fact, there is a state visit that's currently on. How do you see that?
I can tell you one thing. It's very easy to understand why US personnel would have to be on the ground to launch those ATACMS missiles, because these are high precision missiles, which launching them requires significant training, which it raises doubts whether Ukrainian troops could have gotten this training, especially including the fact that we know that Ukraine's they're considering lowering the age for conscription for people to go, because they're lacking people on the ground. Whereas Russia has so far not needed any help. We don't need specifically North Koreans to be making gains. We've been making gains for months. So, without physical proof, and if you look at both sides, neither Russia nor North Korea has even, have even dignified this with it's ridiculous. So far, there's no confirmation. But again, to launch very specific, very high precision technology from Ukrainian soil, it makes sense that it would require US personnel.
All right. Tatiana, thank you very much for joining us on NDTV Profit and sharing your views. All right, going back now to how the markets have performed. Well, it was Friday cheer for the markets. The Nifty and the Sensex ended a percentage point higher and have rallied 3% in 2 consecutive weeks. Most sectoral indices also rose, with the Nifty Pharma gaining the most. Now, Neeraj Shah is joining us with a wrap of all the action that we're seeing on the bourses.
Interesting day of bounce for the markets. Remember, yesterday everybody was grappling with the question about why is it that there was so much of bearishness in the market. You could now blame it squarely on expiry date jitters, and that bounce has been pretty strong in the session today. So 0.9%, and this is despite banks or IT not participating today. So quite stunning the move that we've seen in the large caps today. The broader markets had a fairly decent outing too, because the market breadth was good. I mean, so 1/3%, and the small caps particularly 0.78%, which brings their weekly performance to about 5.5% in the session. But for today, if you look at the heat map, smattering of green, very little red, 2 or 3 or 4 noteworthy losers, actually just a couple of them, Shriram Finance and Power Grid. The winners across the board, from Bharti in the telcos to Sun and Cipla in the pharma space to M&M from the auto space to ONGC and Reliance from the oil and gas to Ultratech and Adani Port from infra. So it was across the board. And if you look at the BSE 500 as well, the gainers and losers. Yes, the Adani Group features there, as it been the case for the last 3 days. So green and energy making their way into derivative space, some of these stocks and doing well. But Piramal Pharma, Lloyds Metals, Spark doing well. What didn't do well? Credit Access Grameen on the Goldman downgrade. Poonawalla FinCorp down 5%. There was weakness in Home First, in ITI and Triveni Turbine too. And just a couple of mentions of stocks which entered into the derivative space. So LIC had this big bang move. JP Morgan said that the bank assurance rules actually benefit LIC, and that stock was up about 5%. I wonder what Avenue Supermarts and some of the others have done as well. But largely, it was a positive day for most stocks in trade. So not a bad end to the week. Happy Thanksgiving to everybody.
All right, Neeraj, thank you very much for that. Now, moving on, foreign investors continued their selling for the second session. This is after 3 sessions of buying. Foreign institutional investors sold shares worth 4,384 crore rupees, whereas their domestic counterparts mopped up shares worth 5,723 crore rupees. Well, the Adani stocks have been surging in the past 2 days of trade. More good news overnight for the group. Agam Vakil has the details. Now, Agam, give us more in terms of what you're picking up on this.
So we have a whole host of institutions and entities across the globe coming in support of the Adani Group companies, especially following and in the wake of the group releasing that statement suggesting that the key members in there, Gautam Adani, Sagar Adani, as well as Vineet Jain, have not been implicated when it comes to certain charges with the FCPA. And on account of that, we have more and more good news coming in. I'm going to start off with Kerala, right at home, where they have in fact signed a supplementary concession agreement with the group when it comes to the Adani Verinium Seaport. And this actually paves way for, well, earlier than expected when it comes to revenue gains from the Verinium Seaport. Of course, the port will be fully operational by 2028, but it's not just Kerala. Moving on to, well, the former Andhra CM, Jagan Reddy, who has also refuted claims with respect to bribery and the Adani Group, and in fact has also suggested that he may look to sue for as much as 100 crores when it comes to media companies reporting these incorrect, allegations. Moving on, we also have a lot of updates coming in from Africa. Tanzania has in fact extended its support back in May of 2024. The Tanzania government had signed an agreement with the Adani Group company. This was to operate one terminal in Dar es Salaam, and well, Tanzania is suggesting that there's no change in that agreement. Neither has there been any change with agreement when it comes to the Sri Lanka Port Authority, where once again the chairman has said that they're not looking to cancel any of these terms of agreement. Well, moving on, we also know that Abu Dhabi's IHC is unworried about the outlook of the Adani companies, and they haven't made any changes with respect to their investments in the Adani Group companies. But even later on today, we had an update from CRISIL where they have in fact reaffirmed their positive outlook, and they cite strength of the group's financial and business profile. And they also say that allegations haven't led to any negative actions from lenders or investors. And in the latest, we also have a whole host of Japanese banks lending support to the Adani Group company, where in fact someone like Mizuho Financial Group has suggested that the charges will not have any long-term implications, and there are no plans to pull back when it comes to Sumitomo Mitsui or Mitsubishi UFG Financials. So all in all, a lot of entities from across the globe coming in support of the Adani Group companies.
Well, the Ministry of External Affairs has come out with a statement on the US case against the Adani Group, saying that this is a legal matter involving private firms and individuals. The US Department of Justice, Rishabh, sent in this report earlier.
India's Ministry of External Affairs has come out with a statement after it was questioned in a routine briefing about the indictment against the Adani Group and several of its directors. The MEA has said that this is a legal matter that involves private firms, the US's Department of Justice, as well as private firms. So it is not party to any of these issues, and it has said that there are established procedures and legal avenues avenues in these cases that, which it believes will be followed. It also said that it has not received any sort of a request from the US on this case in terms of a request by a foreign government for a service of summons or in terms of anything that is related to arrest warrants. It did mention that any request that it receives will be examined on merit, and it also added that the government was not informed on the issue in advance. So the MEA with a statement there on the Adani Group.
Well, India's GDP grew at the slowest pace in 7 quarters, led by slower growth across the industrial sector. It grew by 5.4% in the September quarter compared to 6.7% in the previous quarter. Vishwanatha and Pallavi join in with a breakdown of the key numbers.
The latest quarterly GDP growth data that's coming in for the second quarter, July-September quarter, GDP growth is at about 5.4%. That's what the government is saying. That is much lower than the 6.5% estimate that was already there from economists. Not only that, this is the lowest GDP growth number in 7 quarters, and that's why this data is very, very important to sort of cut and slice and try and understand what's actually happening behind the picture. And that's why we're calling this the Q2 GDP shocker. Now, in the graphics that are going to come up on the wall behind us, we're going to talk about what exactly happened here. July-September GDP growth has slowed to 5.4%. This is the slowest in 7 quarters, as we already mentioned. We have also seen that 6.5% was the estimate by economists. That has not been met. In fact, it's far away from that. It's also far away from what the RBI estimated for the second quarter, which was 7% GDP growth for this financial year, second quarter of this financial year. It's much lower than that. Now, what exactly happened behind the scenes? There are 4 key reasons why exactly this growth number have not been met. And I'll throw to my colleague Pallavi to try and explain to us what these 4 reasons are. Pallavi.
Right. So like you've mentioned, the number is substantially lower, not just from the Bloomberg poll of economist estimates, but it's also even lower than what the RBI was targeting, which throws up the big question regarding whether we're able to now meet the full year forecast, which was at 7.2%. That was already a fairly lofty target or a fairly lofty estimate, according to economists, and given the Q2 shocker of sorts, that sort of puts that number into even greater jeopardy, because it's very unlikely that we're now going to be able to meet that figure for the full year. A lot of economists have already begun revising their full year forecasts, and they're closer to anywhere between about 6.5% to 7% now for the full year. Like you've mentioned, multiple reasons for this weaker than anticipated figure. The key disappointment was definitely from industrial GVA. So construction, utilities, and manufacturing, of course, which came in at 2.2%, substantially lower than what we saw in the same quarter a year ago, and also significantly lower than what it was in Q1. Of course, partly because of the seasonality, Q2 did see an extended southwest monsoon. But even factoring in that, the figure is lower, and it remains to be seen whether we're able to make up in manufacturing GVA going forward. Construction, again, critical also, Vishwanath, because construction has been one of the key drivers of employment in the last several years, especially post-pandemic in the economy. And a lower than anticipated construction figure also throws up questions regarding employment prospects for a very large number of people who were finding work of some sorts in that space. So it is important for that sector to continue to grow at a strong pace. The last quarter, of course, we saw double-digit growth in construction. Agriculture was, of course, better than expected from Q1, and services was broadly holding up. But of course, on industrial GVA, it's more of a wait-and-watch mode for now. In terms of expenditure side trends also, while we have seen mixed indicators from urban as well as rural demand, with rural demand showing some sorts of recovery. Urban consumption was, of course, iffy in Q2. That has shown up in the numbers as well. Whether that's recovering or not is something we're still watching out for.
Right. Pallavi, you mentioned urban consumption, that there is an expectation that with better than expected sort of crop in the second half of the financial year, you will see that improving. Rural demand, as Pallavi said, is holding strong. There's also this festive season as well as wedding season sort of push to demand that is coming in towards the end of the financial year, which is hopefully going to push up the growth number. But as Pallavi said, the 7.2% number that the RBI has seems a little suspect right now. The CEA mentioned that this might be too soon to sort of expect that, but let's see what happens in the next 2 quarters. But that's the Q2 GDP shocker for you.
Now, the Impact Foundation conducted its 10th annual donor meeting today at the Tata Memorial Centre. Impact Foundation was established in 2010 with an aim to provide best pediatric cancer healthcare. The foundation also provides education and other help to ailing patients while they are undergoing treatment. Now, every year, nearly 4,000 children are treated across the country. Till date, over 20,000 children have been completely cured by the foundation. Considering that the patient needs to live in the city for at least 67 months for blood transfusions and other related treatments, nearly 25% of the children abandon treatment midway. This rate has been brought down to 5% by the Impact Foundation. Now, the cure rate of the TMC and the Impact Foundation together is around 80%. The leadership of TMC and Impact Foundation have requested for people's support towards the great and humble work that the doctors and other support staff of TMC and Impact Foundation are doing towards curing children suffering from cancer. Well, the government has taken several steps to address growing concern over children getting addicted to online games. Now, one of the key measures is ensuring that no gaming advertisement features individuals under the age of 18. Rishabh is joining us with more details on this. Hi, Rishabh. So the government looking to take substantive steps over this?
Right, the government has reiterated all the concerns that it has towards children getting addicted to online games. Now, this was a written reply by Junior Minister Jitin Prasad, who is the Junior Minister for Electronics and IT. He mentioned that there's about 4 steps that the government has taken to ensure that children don't get addicted to online games. Firstly, it was that no gaming advertisement should actually depict people or kids under the age of 18 being involved in them. Secondly, all gaming ads should carry a disclaimer that says that the game involves an element of financial risk and may be addictive. Thirdly, he wrote that the government has moved towards presenting that these games should not be presented as an alternate income or an alternate career. And fourthly, the person that is depicting doing gaming should not in any way being depicted as someone who's more successful than others. So these are some steps that the government has taken to address these concerns.
Right, Rishabh, bringing us all those details on that. Thank you. Well, in fact, that's all we have time for right now on Profit 360. Thank you for joining us, but do stay with us for more.
Becoming a member of jury of NDTV was a totally different challenge altogether.
When you recognize contribution to society, these stories are inspiration for everyone who views them.
The NDTV Indian of the Year is an extremely important initiative.
Nominees were just extraordinary.
Each one of them is a rock star.
And the achievers in this field who are inspiration for the Indians in this country have been chosen for this prestigious award.
When the whole day passes like a blur, the news just whizzes past, and you're trying to stay informed. It is our job to bring you news that truly matters. At Profit 360, we cut through the clutter, the Wall Street deals, finance and policy news that could shape your tomorrow, the newsmakers, the trendsetters, and the innovators. In 30 minutes, we've got you covered. So stay ahead, stay informed and stay profitable with Profit 360.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
When the whole day passes like a blur, the news just whizzes past, and you're trying to stay informed. It is our job to bring you news that truly matters. At Profit 360, we cut through the clutter, the Wall Street deals, finance and policy news that could shape your tomorrow. The newsmakers, the trendsetters, and the innovators. In 30 minutes, we've got you covered. So stay ahead, stay informed, and stay profitable with Profit 360.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
When the whole day passes like a blur, the news just whizzes past, and you're trying to stay informed. It is our job to bring you news that truly matters. At Profit 360, we cut through the clutter, the Wall Street deals, finance and policy news that could shape your tomorrow. The newsmakers, the trendsetters, and the innovators. In 30 minutes, we've got you covered. So stay ahead, stay informed, and stay profitable with Profit 360.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
When the whole day passes like a blur, the news just whizzes past, and you're trying to stay informed. It is our job to bring you news that truly matters. At Profit 360, we cut through the clutter, the Wall Street deals, finance and policy news that could shape your tomorrow. The newsmakers, the trendsetters, and the innovators. In 30 minutes, we've got you covered. So stay ahead, stay informed, and stay profitable with Profit 360.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
When the whole day passes like a blur, the news just whizzes past, and you're trying to stay informed. It is our job to bring you news that truly matters. At Profit 360, we cut through the clutter, the Wall Street deals, finance and policy.
Hello and welcome. You're watching the Small and Mid Cap Show. Well, this show, we take you through some conversations with the outlook of companies and, well, conversations around what we can expect from the managements of these companies. First up, we are in conversation with the Chief Financial Officer of Gulf Oil Lubricants, Manish Gangwal. Manish, thank you so much for joining in. Well, I want to start by asking about the company making significant acquisitions in the EV-related businesses, and I want your view and your way forward as to how things could potentially pan out for the business is in this area specifically.
Yeah, good morning. Thanks for having me on your show. Basically, as a lubricant company, we are primarily a lubricant company, and we have been, servicing our entire range of automotive and industrial lubricants for last many decades in India. But as EVs started becoming sort of talk of the town, and more people will be looking at EV as an option going forward. While we believe that lubricants market is going to continue to grow in India for many decades still, but we as a company, wanted to look into the EV value chain and where we can play as our role in the EV value chain. And what we figured out was that we have a very strong brand which is known to the automotive consumers. Today they may be an ICE vehicle consumer, tomorrow they may be an EV consumers or EV buyers. How to remain relevant to those consumers, those buyers. At the same time, we have a very strong connect with OEMs who are doing currently, let's say, ICE vehicles, and tomorrow they may venture into some sort of EV models they may bring out. So how to use those strengths and our distribution network. With that thought process, we started looking at the sector, and what we came through was that manufacturing of chargers is a good opportunity. And as the EVs grow, there will be a requirement of more and more chargers for EVs. And that's where we started acquiring companies. We acquired a company called Indra Technology in UK, and their expertise is slow chargers, slow AC home chargers for cars. And then we acquired another company in called Tyrex Transmission, based out of Ahmedabad. They are having DC fast charger products. So we have now complete end-to-end charger solutions for any of our consumers, buyers, customers, OEMs. So right from AC chargers to fast DC chargers, we have a complete range.
Right. Manish, at least as far as Tyrex is concerned, we understand that you had strong revenue growth in the second quarter. Even your other acquisition, taken together, can you give us an idea about kind of contribution that these companies can bring forward to your consolidated numbers, if not for the next 6 months, for perhaps the next 18 months?
See, our objective in Tyrex, particularly where we have 51% stake and they are fast growing. When we acquired this company in October 23, their last reported FY23 turnover was 12 crore rupees. So on a very small base, then we doubled it in FY24 to nearly 25 crore rupees. And as you rightly mentioned, in H1 itself, Tyrex has delivered 25 crore so growing at nearly 300% over H1 last year. So this company, overall, the demand is very good. And we believe that the company can at least double the turnover every year for the next 3, 4, 5 years. And, should be easily doable, which means that we are aiming at roughly 500 crore rupees, at least turnover in next 3 to 4 years from this acquisition.
And when it comes to profitability for both these companies, Manish, what's the way forward? When can we expect them to be in the black?
So currently, they are EBITDA neutral at this stage. What we are also doing is that the company is investing into R&D. Company is investing into a lot of service network required for servicing those chargers and installations and all those capacities. Plus strengthening the manpower. We are expanding the capacity of the plant now. So there is a lot of investment which will be there in these building the company into a very, very formidable company, a very strong player in the market. But we believe that once we reach a size and turnover scale, the company should be able to deliver at least 12 to 15% EBITDA margins, which is what the lubricant business is doing. So it will not be a margin dilutive business on the consolidated basis. for the company.
Right. Well, moving on, let's talk about your core business. And, at the moment, what can you tell us about growth expectations going forward? Keeping in mind how your first half of this financial year has been for you, what can we expect in the second half?
So we had a very good first half, I can say. Growing our revenues nearly around 8%, growing our EBITDA by 15% and PAT by 20% plus. So we had a very good H1. Typically, the lubricant season starts from October onwards. So H2 is usually better than H1, as that's the past trend suggests. So we are hoping for a good H2. Also, I would like to add that some of our segments like factory fill business, where commercial vehicle is our primary segment for factory fill, they have not been doing lifting that much from OEM perspective. As we know, commercial vehicle production has slightly gone down. So if we foresee that commercial vehicle will also be now lifting more and H2 will be better for them, that should also add up. So overall, we are looking for a good H2 and while delivering an excellent H1, I would say.
All right. What I also want to talk about specifically about AdBlue, and in this case, if you can give us an idea about the kind of traction that you're witnessing here, the kind of market share that this particular product has right now, and what can you tell us about the outlook here?
So AdBlue as a category, as you know, is mandatory now for all BS6 vehicles, diesel vehicles, and it's been rapidly expanding in terms of requirement. We have nearly made our volumes 6 times in last 2 years. So our FY22 volume was around 16,000 KL, and then we did 78,000 KL in FY23 and nearly 1,28,000 KL in FY24. So we have nearly grown more than 6 times in last 2 years. So that is a massive, I would say, expansion. But and obviously, as you mentioned, we have close to 25% market share here. But we believe that this category will continue to grow now. Double-digit 15-20% growth annually is what we are expecting in this category. This is a relatively, high volume, low margin business, but in the end, it is need of the consumer, need of the customer, which is already buying our lubricant. So, and synergistic to our distribution, and that's why we have gone ahead with the approach of delivering a value product and a very good quality product to our customers. We are quite hopeful that AdBlue will continue to grow at least 15% for the many years from now on.
Right, Manish, a question also on your overall operating margins. Now, we've seen some amount of volatility in your key inputs, and the question really is that, firstly, how much of that volatility in the key inputs comes in the ongoing quarter, or is there a delay? And based on that, what is your overall projection on your consolidated operating margins for this financial year?
So we have been guiding a band of 12 to 14% EBITDA margin, and we are quite hopeful that we have delivered it in H1. We are quite hopeful it will be, even slightly better than H1 in H2. Also, we have seen that crude has sort of stabilized around $72, $73, below $75, and if that remains, typically, the lag effect of that is on the base oil with 1 to 2 months of time lag. And we believe, so far we have not seen any major impact on base oil, but we are quite hopeful by Q4, if there is some improvement in base oil pricing and the market price competition scenario remains stable, we should see positivity in the margin. But we are sticking to our guidance of 12 to 14% margin band for H2 as well, while investing more in our A&P. As you must have seen, we have a mega campaign going on right now, which started in September, the Unstoppables, where all our 3 brand ambassadors, MS Dhoni, Hardik Pandya and Smriti Mandhana, have come together for the first time. So it's a mega campaign, on ground, off ground, in movies. There is a lot of activity going on, so we are spending slightly more on A&P as well.
All right, and a final question then, Manish. Going forward, at least as far as your second half of this financial year is concerned, are you going to look to consolidate on your current product line, or are there going to be newer introductions here as well in store?
We keep introducing new products. Right now, as as a part of our Unlock 2.0 theme, which we, unveiled sometimes in June, we are focusing internally on premiumization, which means the high margin products, synthetic products. More and more of those will be a part of our portfolio and sales efforts, and that's where we see new products being launched quite regularly in requirement with the market needs.
All right, Manish, we leave it at that. Thank you so much for joining us and taking us through your views on, well, the company, of course, as well as the, outlook going forward. We wish you the best. That's the management of Gulf Oil telling us about, what's in store, the plans on the anvil, and also, of course, we've discussed plenty in terms of this performance. The stock itself has, as well as done reasonably well because it's up as much as 58%, as you can see on your screen there, in the last 12 months. So certainly an outperformance, if I can call it that, even with respect to your key indices coming through. But with that, we shift focus to yet another company which has in fact also outperformed the key benchmarks, and that is NCC. This one has gone up by as much as 85% in the last 12 months. So certainly substantial gains coming in. A bulk of those gains, however, coming in the first half of these 12 months. And it maintains itself, notwithstanding the overall market volatility. Well, to take us through the outlook for this particular company, we are now in conversation with Neeraj Sharma. He is the head of strategy at NCC. Neeraj, good afternoon, and thanks for joining in. Neeraj, I actually wanted to take stock of the second quarter right at the top of our conversation here. You suggested a guidance of around 15% growth. Post elections. Have things changed for you, and do you think that this potentially could require some change here in terms of your top line expectation growth?
Very good morning, Agam. If you really look at the performance of our company in the H1, there is a revenue increase of about 13% and flattish kind of parameters as far as the profitability of the company goes. That said, as you rightly said, we have guided for a revenue growth upwards of 15%, and as we speak, we continue to stick with the same number. If you really look at the performance, I'm just trying to extrapolate that a bit. If you really see the performance of the company in the last couple of years, the H2 traditionally has been better than H1. If we really try to sum that up in terms of a number, you will get to see about 20 to 25% growth generally in the H2. So as we speak, we continue to stick with the same guidance that we have shared with the street, and hopefully hit those numbers.
Moving on, I also want an idea on the execution that you have in store for the second half. If I'm not mistaken, and please correct me if I'm wrong, your current order book stands at a little over 52,000 crores. How much of that is going to be, or rather be expected to be executed in the next 6 months? And, if you could just give us an idea about on the further timelines on execution here.
Out of this, you are absolutely right. The order book that we have had, at the end of September was 52,370 crore. If we really talk about the next 6 months, about 12,000 crore, from this bucket should get executed in H2.
All right. And can you also tell us a little bit more about your latest order? This is the 3,400 crore order for Dhaudhan Dam under Ken Betwa Link project. The timelines under which this project is going to be executed, and if you could give us more details here as well.
Sure. Firstly, this is one of the first project that has been awarded for what we have been talking about for about a decade or so, that is interlinking of the rivers. What this scheme intends to really do is to, connect the water surplus areas with the water, in the areas where the water is a scarce commodity. So this project is a project that is expected to be executed in about 6 years' time. What the project intends to do is to really, draw the water from a water surplus area called, Ken Betwa, and bring that water to a, to what we call Bundelkhand region of UP, close to Jhansi. So that is the area in which the water continues to be a very, very scarce commodity, So this scheme intends to bring water to that part of UP. So this, and as I have shared with you, this project is required to be executed in about 6 years' time.
Okay. Well, also moving on in terms of the order flow, and from what I understand, the awarding activity increases in the second half, specifically in the fourth quarter of the financial year, usually. Is that the case, and is that how you're expecting the things play out as well? And based on that, what is your expectation of order inflow in the next 6 months?
Yes, you're absolutely right. Generally, the award picks up in Q4 and Q3. That said, I also take this opportunity to share with you the fact that you are already aware, that in the first quarter of this financial year, we have had, central government elections. So generally, the award, the pace of award has been, bit slow but things are picking up. To answer your question specifically, as we speak till today, we have bagged total orders worth 11,645 crore. I repeat, 11,645 crore, which is about 58% of the lower band. We have already shared one order inflow guidance with the street, which is 20,000 to 22,000 crore. If we really take into account all the awards that we have, all the projects that we have bagged till today, we have already achieved about 58% of our target. And we are quite hopeful to achieve the order inflow guidance that we have shared with the street.
All right. Also, a question on your debt, and from what I understand, your net debt stands at around a little over 1,600 crores. I believe that you want to bring this down further to around the 500 mark. What are the timelines that you're working with here?
Maybe next 2 quarters, we should be able to bring this down close to 500 crore net number.
And also, when it comes to private sector contracts, can you tell us about what kind of exploration you're trying to figure out here? If you have, in fact, made any headway when it comes to private sector contracts, what's the way forward here?
See, primarily the infrastructure sector is a sector that is that continues to be dominated by the central government, their agency, the state government, and various arms of the state government. But we have been able to bag some private sector contracts as well. It would be close to 5-6% of the total order book that we have with us.
Okay. And also want to know a little bit more about the water division. Now, we've had several companies, in fact, talk about the focus on Jal Jeevan Mission. In fact, we've had more and more companies being listed from the same space. You, from what I understand, at least about 12 to 15% of your order book is based on this particular aspect, that is the water division. Just want to understand better if your mix could potentially change because of that. What kind of growth are you seeing in this particular category, and the kind of traction that you're seeing in the sector?
As you rightly highlighted, we have about 12% of order book from this division, what we call, the water division. Other than Jal Jeevan Mission also, Jal Jeevan Mission is a flagship scheme of the Government of India, and we understand, a lot of households have already been provided potable water connection, but about I think 4 to 5 crore households still needs to get potable water connection. That said, other than Jal Jeevan Mission, also in the water space, we are of the view that we will get to see a lot of water supply projects, waste treatment plant, sewage treatment plant. So this is a space that is very interesting to us.
All right, Neeraj, we'll leave it at that. Thank you so much for joining us and taking us through the company's outlook as well as the business going forward. Thank you. And with that, it's a wrap on this edition of the Small and Mid Cap Show, but lots more lined up on the other side. Stay tuned to NDTV Profit.
Becoming a member of jury of NDTV was a totally different challenge altogether.
When you recognize contribution to society, these stories are inspiration for everyone who views them.
The NDTV Indian of the Year is an extremely important initiative.
Nominees were just extraordinary.
Each one of them is a rock star.
And the achievers in this field who are inspiration for the Indians in this country have been chosen for this prestigious award.
When the whole day passes like a blur, the news just whizzes past, and you're trying to stay informed. It is our job to bring you news that truly matters. At Profit 360, we cut through the clutter, the Log Street deals, finance and policy news that could shape your tomorrow. The newsmakers, the trendsetters, and the innovators. In 30 minutes, we've got you covered. So stay ahead, stay informed, and stay profitable with Profit 360.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
When the whole day passes like a blur, the news just whizzes past, and you're trying to stay informed. It is our job to bring you news that truly matters. At Profit 360, we cut through the clutter, the Log Street deals, finance and policy news that could shape your tomorrow. The newsmakers, the trendsetters, and the innovators. In 30 minutes, we've got you covered. So stay ahead, stay informed, and stay profitable with Profit 360.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
When the whole day passes like a blur, the news just whizzes past, and you're trying to stay informed. It is our job to bring you news that truly matters. At Profit 360, we cut through the clutter, the Log Street deals, finance and policy news that could shape your tomorrow. The newsmakers, the trendsetters, and the innovators. In 30 minutes, we've got you covered. So stay ahead, stay informed, and stay profitable with Profit 360.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
When the whole day passes like a blur, the news just whizzes past, and you're trying to stay informed. It is our job to bring you news that truly matters. At Profit 360, we cut through the clutter. The Wall Street deals, finance and policy news that could shape your tomorrow. The newsmakers, the trendsetters, and the innovators. In 30 minutes, we've got you covered. So stay ahead, stay informed, and stay profitable with Profit 360.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
When the whole day passes like a blur, the news just whizzes past, and you're trying to stay informed. It is our job to bring you news that truly matters. At Profit 360, we cut through the clutter. The Wall Street deals, finance and policy news that could shape your tomorrow. The newsmakers, the trendsetters, and the innovators. In 30 minutes, we've got you covered. So stay ahead, stay informed, and stay profitable with Profit 360.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
When the whole day passes like a blur, the news just whizzes past, and you're trying to stay informed. It is our job to bring you news that truly matters. At Profit 360, we cut through the clutter. The Wall Street deals, finance and policy news that could shape your tomorrow. The newsmakers, the trendsetters, and the innovators. In 30 minutes, we've got you covered. So stay ahead, stay informed, and stay profitable with Profit 360.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead.